So, welcome to today's presentation. My name is Peter, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. We're going to be mixing fundamentals with technicals once again. And overall, we had a very busy last 2 days, and that includes also the weekend. All charts we presented today are to be with the same time frame, and with no time to waste, we have practically, in our opinion, three elements which stand out over the weekend. The first would be on a fundamental level the takeover, even at gunpoint, of Credit Suisse by UBS. Now, the takeover as such seems to be more or less easing market worries. It should be noted that more or less the UBS also got a steady supply line, a steady assistance line, if you prefer, from the Swiss National Bank of 100 billion francs, which is pretty much substantial. It's expected to improve its profitability by reduced labor costs. And overall, the situation seems to be slowly but steadily, I wouldn't say solidifying, but or even normalizing, but definitely the volatility is dropping. And we have to note here also that we had the second element, which was a joint statement practically by major central banks, and that would be the Fed, ECB, BOE, BOJ, Bank of Canada, if I'm correct, and Swiss National Bank, more or less highlighting that there is a cooperation between them and they stand together in this. And there is a relative decisiveness that the banks, the central banks, will prevent another meltdown like the one in 2008 from happening once again. And that tended also to provide some reassurance to the markets. I would be highlighting, though, that we have, on a technical level, a US dollar which has been dropping. And it has been dropping also during today's early European session. Allow me to drill out to the daily chart. You can see the drop on Thursday, Friday, and during today's European, Asian, and early European session. We have to note here that practically the index broke clearly the 103.75 support line, and we have to turn this now into resistance line. So let's start by coloring this in red. But the stakes remain high, actually, regarding the banking crisis. I would say that the situation remains rather fragile, in my opinion. Let's go hunting for a new ultimate support line, a little bit down to the deeps, somewhere here. Note the shows which practically support the idea here of being a support line. Could go a little bit higher, but I would prefer to go all the way practically to catch and encapsulate all this sideways movement here as the low boundary. And that would be in green, the 101.30, yep, support line. Maybe 35, let's have a look. So it's a little bit off from the S2, but still would see it as a valid support line, sorry. Let's correct also the labels, by the way. And something regarding back to the fundamentals, as we are changing the labels, correcting the labels if you prefer. There are a number of banks which are at pretty volatile position. And I would be also noting that the situation in national economies on a monetary level is expected to become even tighter. And that could be practically pro- having a problem with central banks, sorry, commercial banks, as should there be central banks which are weaker or have riskier loans out, they may suffer the consequences more easily or they may be more volatile. I wouldn't be surprised to see another bank falling. The question is how big the bank will actually be. If we're talking about a regional US bank, I shouldn't be worried. And we may even see larger banks having some difficulties, so some wobbling here and there could be expected. Now, we have also corrected the labels, and we're ready to discuss the direction of the US dollar index. There's definitely a clear downward trend line, which seems to be guiding the index. So we tend to maintain a bearish outlook in that perspective, and as long as the price action remains below the downward trend line. At the same time, I would be noting that the RSI indicator is pretty low and still dropping. It's at 37. So that should not be neglected either. And another sign which is interesting is that the price downward motion is practically approaching the lower budget band, but still has not reached there. So there is still some room for the bears to maintain the movement down, the downward movement. Now, should the bears maintain control over the pair, over the index, sorry, we may see the price action breaking the 103.05 support line and start aiming for the 102.45. Note that the 102.45 provided resistance a couple of times and support here. So it's pretty valid level. And after that, we have a wide distance with the S3. We have just set at 101.35. That's over 110 around ticks. So it's an issue. Yet we shouldn't be surprised with such wide distances. It's easily doable. If we drill out to the daily chart, you see, for example, that we had similar movements in a number of days, both downwards as well as upwards. So the volatility should increase, may allow for such distances to be covered quite easily, or if you prefer, quite fast. On the flip side, should the pair start stabilizing, which for the time being is not our base scenario, we may see the price action signaling destabilization exactly, sorry, the index signaling destabilization exactly by breaking the downward trend line we have just shown. And at the same time, though, I would expect it to respect, if you prefer, the 103.75 resistance line and the 103.05 support line. So that would imply a motion like this. But definitely a clear breaking of the downward trend line would be required as a first signal that the downward motion has been interrupted. On the other hand, despite the bullish scenario being remote, it's still possible and it should be covered, in which case we may see the price action reversing direction, definitely once again breaking the downward trend line, signaling that the downtrend is over. Yet, for a bullish scenario, would require also breaking of the first resistance line, the 103.75, and the price action to start move decisively towards the 204.55 resistance level. Very interesting index. Let's have a look also at Euro USD. Euro USD, which has been on the rise, but it's rather unconvincing for a bullish scenario. You can see even that the pair has stabilized since the late American session on Friday and remains in a tight range bound movement between the 1.0760 resistance line and the 1.0525. The RSI indicator is just above the reading of 50. It's actually at 55.775. And note how the Bollinger Bands have started to converge in another indication of lower volatility for the pair. So we tend to maintain our bias for the sideways motion to continue between the pre-mentioned levels. And I would be highlighting here that the movement may be substantially tighter. Note though that the boys back in the research department have highlighted this, that there is a slight upward movement. I wouldn't change my bias for sideways motion unless the pair rises, breaks above the R1 1.0760 and starts aiming for the 1.0925. I would be noting the validity of the resistance lines. It's interesting that we had a touch, another touch, force break, and also touch here. So the R1 seems to be standing its ground. On the flip side, why? On the flip side, also the R2 is pretty valid. You can see the touches here and here. So it's an interesting movement, which on the one hand has some slight bullish tendencies, but for the time being remains unconvincing. And for a bullish outlook, we would require a clear breaking a higher peak than this one practically. And that would be signaling that it's exiting the sideways motion and entering a bullish movement. A breaking of the R1 1.0760, once again, a level which has proven its worth to the upside a number of times, but has also provided support here. So it was tested on both sides. On the other hand, should the bears take over, we would expect the price action to drop. In this case, the upward trend line remains immaterial, in my opinion. The main element which would be signaling the possibility of a bearish outlook would be if the price action of Euro USD breaks below the 1.0525 support line, a level which provided support once, twice, three times. That was clearly and in the near past. Mind you that the last one we have mentioned right here was around the last days of February. So we're talking about the past 3 weeks here, in essence. And should the 1.0525 be broken, the next possible target for the bears could be the 1.0310. Now we have to note here that ECB's hawkish interest rate decision seems to have moved out of the picture. It's now more like the crisis and the possible repercussions on Eurozone's banking sector from the fallout of Credit Suisse. But it seems to be holding on. I would be worried on the Euro side, more on the release of the preliminary PMI figures, which are due out on Friday's European session. And should we see a drop of the figures, that would imply practically a further contraction of economic activity or a slowdown, depending on the reading as such. And in such a case, we may see the euro weakening somewhat. Another factor to keep an eye out, I would be highlighting also the release of the Fed's interest rate decision, but this time that would be more affecting the USD side of the pair. And should the Fed actually ease on its hawkishness, that could be weakening the US dollar. And I'm highlighting the possibility of the bank actually remaining on hold. It's a scenario that's a little bit far-fetched, but given the recent banking crisis, we may see the Fed actually opting to remain on hold in order to see how the dust settles down and what the scenery is like in the banking sector before it moves on with further rate hikes. A small pause from the rate hikes, I think, would be more than welcome from the equities markets in the US. So that could be easing the market woes and thus may cause some safe haven outflows for the greenback, in which case we may see the Euro USD actually dropping. Mind you that I wouldn't be surprised to see the market slowly but steadily start shifting its attention towards the Fed's interest rate decision on Wednesday, and that may start even from today's American session, definitely tomorrow's. By the way, we have mentioned that for bearish outlook, we would require clear breaking of the S1 1.0525 here, and it's clear where the support lines or the support points are. I would like though to test the validity once again of the 1.0310, which is a level we have not visited in a little while here. And we can see that provides support here, and that was in the last days of November last year. Also provided support here, mid-November, and here. Okay, seems to be pretty valid as well. Okay, readjusting the chart. Once again, we maintain a base scenario for the pair to remain in a sideways motion, yet we note also the bullish tendencies of the pair for the time being. Let's have a look at GBP/USD. GBP/USD, which has been on the rise. It's interesting that the pair was able to clearly break above the 1.2105, creating an upward trend line like this one. So there are some bullish tendencies. It's also interesting to note that the RSI indicator has risen substantially. It's now at 66, tends to imply a rather bullish sentiment on behalf of the markets. So we may see the bulls maintaining control for the time being, though. Before we discuss anything else, we have to make the correction of the 121.05 into a support line, given that the price action has clearly broken above it. And let's go hunting for a new ultimate resistance level. There are interesting peaks here, especially these ones. These are beautiful. Note peak here, here, here. It's very interesting. Could go a little bit higher, a little bit lower, actually a little bit higher, but I think it's pretty good. Okay. And that would be in red. The 1.559. Let's have a look at it. Yep, exactly. Okay, let's adjust the chart and put the label. Give me a sec. Start with the SQ, which is now being at 1.1775. The S2 at 1.1925. the S1 at 1.2105, the R1 at 1.2265, the R3 at 1.2435, and last but not least, the R3 at 1.2590. So, in its quest for higher grounds, cable may find some resistance at first at the 1.2265. And I'm highlighting this level practically because it provided beautifully resistance here and at the same time also support here. So there is also support here, some resistance here. So there is, or if you prefer, this level was tested a couple of times. I would like to unlock it. Note how it provided the resistance also here. It's interesting. Okay, there was actually a break here, so that was relevant. But it provided, sorry, resistance and support a couple of times. So seems to be pretty valid. The second resistance line, should the R1 be broken and the way is paved for the R2, would definitely be the 1.2435. And I'm highlighting this because it was the upper boundary of the past sideways motion here. Let me show it. Can you see this beautiful sideways motion? Anyways, so we have the R1 as the first test for the bulls and the 1.2435, the R2, as the second. Should, though, there be some stabilization, despite once again highlighting that our outlook for the time being for cable is bullish, given the upward trend line, the RSI indicator, which is high, that there is still some room between the price action and the upper Bollinger Band. But should there be a stabilization of the pair, I would expect a first signal to come from the breaking of the upward trend line. That, in combination with the pair respecting the R1 and the S1, may lead to a sideways motion like this. It's pretty wide. We're talking about 160 pips difference. But if we drill out to the daily chart, we can see that the pair was able to make some movements before. It's not the first time, and it has done even wider movements. Such a movement would practically cause the pair to drop, break the S1, and test the R1, sorry, the S2. Back to the forward chart. So we covered the bullish outlook, which is our base scenario. We've covered also the possibility of a sideways motion. What happens with a bearish scenario? In bearish scenario, definitely would be signaled A by the breaking of the upward trend line, as we have mentioned before. However, in a bearish scenario, would require also breaking of the 1.2105 support line. We have to see the pair moving below the S1 in order for us to switch our outlook in favor of a bearish outlook. Now, the next possible stop for the bears would definitely be the 1.1925, a level which provided support here, here, and here. Okay. Let's move now to USDJPY. Clear downward motion, breaking the 132.55. So let's make the necessary corrections first before we discuss direction. Let's not get a little bit ahead of ourselves here. Let's go hunting for a new ultimate support line, and that's way back. We are already at January last year and still going. So there is a support line here. See it here and here. It's pretty narrow, but I'm keeping it. In green, 126.35. Okay, could go even lower. So look. So there is double touch here. On the other hand, though, if we move it lower, so we have a true here and a touch to the upside here. I think I'll go with this one. 124.55. 95, sorry. 125? How does that seem? Nope. 124.90. We're adjusting the chart. Let's correct the labels once again. Here we are. Repositioning them. The R3 now is set at 137.80. The R2 at 135. The R1 at 132.55. The S1 at 130.40. The S2 at 138. And the S3 at 124.90. Locking everything in. And our chart now is ready to discuss direction. It's a beautiful chart. It has a clear downward motion. You can see how the pair is forming continuous lower peaks and lower troughs. So we have a nice downward trend line here. There you go. So we tend to maintain a bearish outlook for the pair as long as it remains below the downward trend line. That's the first level. The second is there is an indicator which is just above the reading of 30, also implying a rather bearish sentiment on behalf of the market. It's currently at 32. Note how the price action has reached, actually at some point it's even surpassed or dropped below the lower Bollinger Band, which may slow down somewhat the bears. It should not be neglected as a possibility. Yet, should the bears maintain control as expected, I would expect the price action to break below the 130.40, a level which provided support here, and note the continuous testing to the upside in the past. So, practically, the level has served both roles as a support and a resistance line. Next level for the bears, I would be highlighting 128. It's characteristic how the pair has dropped, almost reached this level, and that was around the beginning of February, second, third, while it has even tested before that in January. So it seems to be a pretty valid level not to neglect. On the flip side, should the bulls take over, I would expect the price action to rise, clearly break the upward trend line, sorry, downward trend line, and I would require also breaking of the R132.55 before adopting a bullish outlook, with the next possible stop being at 135. Note how it provided resistance here, 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 and here. So that's a pretty valid level as well. On the other hand, should the pair stabilize somewhat, I would expect it to break. Let me extend this downward trend line a little bit. Here we go. I would expect the pair to break the downward trend line within the next 48 hours, and I wouldn't be surprised to see it remaining between the 132.55 resistance line and the 130.40 support line. So it would be a movement like this. Now, for a bullish outlook, we've covered that. For a bearish outlook, should the drop continue, I would expect the price action to drop, break the 130.40 support line, and start aiming for the 128. Okay, let's have a look at the other CPA currency pair that will be USD-CHF. A totally different picture. It's clear that we have to recalibrate here. There was a wide swing which was interrupted. So without any hesitation, there you go. First resistance line being placed here, first support line here, another support line, and in my opinion, there's another support line here. You can see the touches. Okay. To the upside, the 0.9545 remains. Let's have a look where the R2 is standing. $90.40. Yep. So we moved also the R2 by 5 peaks up. Note that at a catch these peaks here. The R1 now is being placed at 0.9335. Yeah. Okay. Let's move to the S1. 9040 seems to be good. S2 at 91.40 with 45 actually. No, it's good. And finally, the 0.9070. So our chart is set. Let's discuss direction. For the time being, there are two elements which tend to imply that sideways motion here is in full play. The first element is the price action, which tends to remain between the 0.9335 and the 0.9240. It's as if the market expects or waits or maintains a wait and see position here. There are some very, very slight bearish tendencies, but I would be noting that there is an indicator which is slightly above the reading of 50. This proves that. So for the time being, we tend to maintain a bias for a sideways motion to be maintained between the R1 and the S1. Now, should also note the Bollinger Bands which have started to converge, implying that volatility could be lower, and that could allow practically the sideways motion to be maintained. It's characteristic how there is like a pincer movement of the upper bound, of the upper Bollinger boundary and the lower Bollinger boundary. Should the bulls take over, they will have to break above the 0.9335, which is a level provided resistance here and for here as well. And next possible stop for the bulls could be set at 0.9440 here and here. On the flip side, should the bears take over, we may see the price action dropping, would require a lower throw than these ones. So it has to drop below the 0.9240. And in that case, next possible stop we set is at 0.9140, a level which is 100 pips lower, provided support here and here. Let me delete this and clear the chart. Let's go a little bit further back. Okay, let's readjust it. You can see clearer now that we have a sideways motion in play here, which seems to be maintained for the time being, especially given the rise of today's European session. It's very, very interesting. Okay, let's have a look at the Aussie currency. AUD. Okay, there is some play around 0.6695. It was good to see that it tested it, but it submerged below it once again. So we tend to maintain a bias for sideways motion to continue between the 0.6695 and the 0.6580. Should the bulls take over, we would require definitely a clearer upside peak than this one. So the pair has to break above 0.6695 sorry, and start aiming for 0.6855. On the flip side, should the bears take over, we may see the price action of the pair dropping, breaking 0.6585, that would be a prerequisite actually for bear shot. Look, I would require low to this one, or even note the testing of the S1 here. So we have to see a lower true, a decisive lower true somewhere here. Next possible stop would be the 0.6460 support level. Let's have a look and check the validity for the level once again. It's a level which provided the resistance in the past, but also support. So it seems to be pretty valid. I'm keeping that. Okay. Moving now to commodity currency CAD, USD CAD. Okay, we have to do some readjustments here regarding the label. Sorry. Very nice, very characteristic sideways motion. It's interesting that despite the weakening of the US dollar, the pair maintained a very, very tight range bound movement, and that means that also the CAD is weak in general. So it's a battle of the weakest. Definitely the drop of oil prices in the past 10 days or so did not help. It was also very, very characteristic. And I would be noting here that we have a sideways motion, which we expect to be maintained. In that case, that would mean that the price action of USD CAD is limited between the 1.3805, an upper boundary, and the 1.036, sorry, 1.3665. Now, should the bulls take over, we may see the price action rising, breaking above the 1.3805, and start aiming for the 1.3975. On the flip side, should the bears take over, we may see the price action dropping, breaking the 1.3665, and start aiming for the 1.3520. Now, some of you guys have requested also to have a look at the Kiwi as there are trade data tonight. Yeah, New Zealand trade data are due out. Okay, some of you guys discussed the possibility of a bullish scenario. Look, if you're talking about this one, it's out. It's a scenario which used to be up until Friday, and you can see that in the late American session on Friday, it was broken. Now, if you're talking about a more long-term perspective, something like this one, where you have higher truths, higher peaks, that's still valid. However, note how the price action has distanced itself, so it's prone for a correction wider lower. For the time being, let's correct the label. Definitely the 0.6190 resistance line has to be turned now into support line. Let's go hunting. I'm going to be choosing this one. No, this is far too close to the price action into the R2. This one's interesting. Note how it provided resistance here and support here. It would become more I think it would be more visible if we drill into the 1 hour chart. Let's have a look how the resistance line leveled out. Note how it has provided support here continuously and resistance here. So it was a level which was tested multiple times. I'm keeping that. 1.6, sorry, 0.6460 in red. Back to the 4 hour chart. We're adjusting it. Let's grab the levels as well. Making start with the, by the way, this one should be in green, a little bit brighter. So the S3 now is being set at 0.5940. The second support line set at 0.6090. The S1 at 0.6190. 100 pips up. 0.6270, the first resistance line. Second resistance line being placed at 0.6360. And final resistance line being placed at 0.6445. Let me check that last one. No, it's 6460, sorry. Locking everything in. Done. So there is a wider perspective of a possible bullish tendency that is also more obvious in the 4-hour chart. On the other hand, we have to note here that the RSI indicator has dropped. It's nearing the reading of 50. It's currently a little bit higher. It's actually at 57. So there may be a risk of a bullish sentiment still left in the market for Kiwi. Should the pair find fresh buying orders along its path, we may see it breaking above the 0.6270, and I would require for bullish outlook a higher peak than this and this one. So it has to break above the R1, and that would mean that it will start aiming for the R2, 0.6360. On the other hand, the possible stabilization of the pair would eventually lead to a breaking of the upward trend line we have drawn, yet at the same time would imply that price action of NZD still remains between the R1 and the S1. Now, a bearish outlook, for bearish outlook, would require definitely a clear break of the upward trend line. That would be the first signal of a changing trend. Yet at the same time, I would also require a clear breaking of the S1 0.6190 and the price action to start aiming for 0.6090. That would allow us practically to draw a new downward trend line, showing us also the limitations of the downward movement. And that should sum it up from all of us at IronFX. Best wishes for solid trading.
Session today, we want to continue with trading insights about silver and look at what affects the price of the precious metal. Silver prices are not easily influenced or affected by political or economic events. This is because it is viewed as having an inherent value, meaning that its value is protected against times of financial stress or political instability. When compared with gold, the price of silver tends to be much more volatile, while a much higher proportion is used in industry than the yellow metal. The price of silver is dependent on supply and demand. In terms of supply, silver has the largest volume compared with other precious metals. Meanwhile, the mining of silver has substantially increased over the past few years and is often a co-product of either mined minerals, such as gold and copper. Due to its wide use in industrial fabrication in products such as conductors, switches and fuses, silver prices can be affected by industrial output levels in terms of production volume. The price of silver tends to follow the price of gold. Although this is not set rule or formula, there is some evidence that a price correlation exists between the two precious metals. As the world's leading currency, the US dollar has an impact on the price of silver. The price direction of the dollar has an inverse effect on silver, meaning that the precious metal can be an appealing investment when the dollar is low. Thank you for watching. This third part completes our series on trading silver. Stay tuned for more exciting educational videos.
Hello, hey guys, hi. Hey, hi Arun, hi Juha, hey hello Namdi, hello Ronald, hello Stephen, and hi to the rest. Hey, thank you very much for joining today on another IronFX webinar series. Hey, give it a moment for the others to join before we begin this webinar. Okay, give it a moment. Okay. Okay, let us begin. Okay, welcome. There are more people joining. Thank you very much. Hey, let me know where you guys are tuning in from. Where are you guys from? Well, for me, I'm from Singapore. It's around, okay, it's 6 p.m. right now. 6 p.m. Oh, Nigeria, Finland, UK. Very, very nice. Wow, all over the world. Belgium. Wow, all these places. I got to go there one day. Okay, nice. Let us begin. Okay, today will be very, very technical. Very technical on the multiple pivot point strategies. There are quite a few that I would like to share with you. So let us begin. Okay, as usual with the introduction, my name is Chen Yongjing, and I am the investment analyst for Everest Fortune Group. So we are also the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. Okay, a disclaimer first, all trading involves risk. It is possible to lose all your capital. And the agenda for today. What are pivot points? The different types of pivot points, and what time frame should you use for pivot points? Also, we will be teaching how to add them into your strategy. So later I can ask you guys what kind of strategy you guys use, then I can see what kind of ways we can implement it into your strategy. Okay, my hair is a bit messy. Do apologize for that. Okay, what are pivot points? Okay, a pivot point is like, let's say the chart, up, down, down. So where are the pivot points? A very simple pivot point is the top and the bottom of the low and the high. So you can call it as the previous high or the previous low. Okay, a pivot point is an intraday technical indicator used to identify trends and reversals, mainly in equities, commodities, and the Forex markets. So all these reversals, what I like to do, I personally use something very similar to pivots. So with this, the high and the low, I like to catch that reversal back in. But of course, with some confirmation. So maybe later I can share on how I do that. Okay, pivot points are also calculated to determine levels in which the sentiment of the market could change from bullish to bearish, vice versa. Okay, the high, just take note, the high, it indicates the highest price from the prior trading day. Hey, I see more of you guys sleeping in. Hi, April. Hi, Iman. Hello, welcome to the webinar. Okay, as I was saying, the high, hey, hello. Hi, man. Okay, as I was saying, the high indicates the highest price from the prior trading day. The low indicates the lowest price from the prior trading day. Okay, the day traders calculate pivot points to determine levels of entry, stops, and profit taking. Later, I'll be turning on trading view, so I'll show you guys the pivots, the multiple pivots. I think I'll be presenting for today. Hey, good to be here. Yes. Lucky you are here. Welcome, Annie Chukwa Kingsley. Okay, I'll be presenting today 4 different types of pivot points. The standard ones, which are the most basic ones, the Camarilla pivot points, which I think I like it. I like this pivot quite a lot. And the Fibonacci pivot points and the Woody's pivot points. So all these are just improved versions of pivot points. So the first pivot point, this one, the Camarilla pivot points. Okay, it's actually refined form of existing classic pivot points formula developed by Nick Stott, and it's a better use of Fibonacci numbers in the calculations of levels. It's also used to calculate intraday support and resistance levels. Okay, let me open it up. Let me open the charts before we begin. Okay, just to let you guys know, also we have an IronFX YouTube channel where you can watch the live TV and the past playlist. You can take a look. You can learn quite a lot of things right here on the IronFX YouTube channel. I'll just paste it over into the chat to everyone. Okay, we start with the traditional pivots first. Okay, traditional pivots is actually, it looks very confusing. There are multiple resistance 2, 1, 1, 2, 3, 4, 5. Support 1, 2, 3, 4, 5. So it's in a way, it's very, very similar to how a Fibonacci works. So if you take a look, if I turn it off, how a Fibonacci works, can from the top all the way there. So it looks very similar. If I turn it on, you see some lines coinciding, especially this area. So it's in a way you can actually trade similarly to how you use a Fibonacci from one area to another area. Okay, this is just the traditional one. You can actually find it in the indicators under pivots. So you can actually get the pivot point standard. Okay, what's the one that I was going to present is the Camarilla pivot points. Okay, let me move the screen a bit so I can see everybody. Oh, more people are joining. Hey, welcome, man. Welcome, Hanin. I just saw you sleeping in. Okay, so we are on this. Okay, so for resistance, for these pivot points, for this pivot, the karma, let me type it out. Okay, excuse my pronunciation. Karma Villa pivots points. Okay, so with this, we have the supports 1, support 2, supports 1, support 2, support 3, support 4. Okay, you said that the email said start time was 10 a.m. GMT. Yes, it's right now it's 10 a.m. GMT. It's 6 p.m. Well, for my timing, it's 6 p.m. GMT plus 8. So it's slightly different. No, it's 11 a.m. I think, can you please, Stephen, can you please say what you meant against? I think I'm a bit confused at your statement. Okay, it's at Mr. Camarilla pivot point. Okay, so we also have the resistance 1, resistance 2, 3, and 4. So what I like about this is I actually noticed that you can actually backtest. With backtest, you can buy from the resistance, you can buy from the support and with the stop loss below. So example like this. Okay, now is 11 a.m. Email said it will start at 10 a.m. Okay. I'm not sure about that. I think it might have been the IronFX email site issue. GMT timing, just let me clear this up. Now it's 11 a.m. GM email said it will start at 10 a.m. Well, I think it's the GMT plus 0. Do you mean that, Stephen? Okay, give me a moment. Okay, let us continue. I think I'll get back to you regarding that again later on. Okay, so yesterday I was actually in a EU shorts. Oh, you are in summertime. Okay. I think I'm a bit confused on the timing too. Later I'll check it out. Okay, so what do we have? Give me a moment. Okay, so we have this area. You can see this area. This is the support 2. It bounced up and it actually coincides with an area where I was actually trading yesterday. So I was actually in a short. I was in a short over here, somewhere here, with my take profits 1 here and take profit 2 at this candle right here. But my final take profit didn't got hit. Well, it's fine. Later I'll explain this trade out also. So I actually like this pivot point a lot, this Camarilla pivot point. So you can see as soon as the what do you call it, the supports for, this is the supports for the previous day, or the resistance for that it gets broken, you normally trade with the trend. So when price goes below it, they continue selling downwards or upwards. So this one, it's the support for that is broken. Let me make it smaller a bit. Okay, let's take a look at old data for some back testing. So you can see here, resistance 4 broken, price continues going upwards. So I'm sure you guys are thinking right now, why not I set a buy stop here, a buy stop with my stop loss at the bottom, maybe here at resistance 3 for price to continue going upwards. Isn't it possible? Please, audio echoing. Okay, let me test the mic. Hi, mic test. I think someone is having issues. Can you hear me clearly? Can you guys hear me clearly? Where will this recording be uploaded? Not here, all clear, no audio issue. Okay, this audio recording, they might upload to the IronFX YouTube channel. They might. So I remembered I saw my, let me take a look. Okay, all clear. So I think for you, for audio Kyun, it might be your speaker issue, or you might want to use a earpiece regarding this echoing issue that you might have. So they okay, no problem. Hey, thank you. Okay, nice. Let us continue. Okay, so they might actually upload it on YouTube. I saw my previous live trading analysis was uploaded online too. So it might take a few days, give them some time to upload. So let me clear these things out. Okay. So some of you guys are thinking probably I can set a short position right here. Upon breaking the support 4, my stop loss to be safe, I can set it at the supports 1 and let price continue downwards with at least, as usual, a minimum of 1-to-1 risk to reward. Minimum 1-to-1. Never go lower than that. You will be, especially 0.8, all this, just ignore. Do not take a trade. So we can see, let us see by the end of this session where price on the euro dollar might be heading to, since it has already broken the supports for pivots. So for this, right, coming back here, just now the back test, to have a safe, very safe one, we have our stop loss at the first resistance, the red line. Wow, even more people are joining. Wow, we have quite a lot of people today. Okay, let us move on here too. Okay, this is a scenario that it did not work out well. So you're taking a shot. You're taking a shot. Let's say you take a shot here, a stop shot. Okay, it's not here. Okay, it's here. This scenario did not work out. So with your stop loss there, and then the maximum it even went was in a negative risk to reward before price reversed all the way up. So you cannot just trade solely based on one indicator, especially the pivot indicator. It's best to combine multiple forms of indicators or your own trading methods before you enter a trade. This is a very good example of a beginner mistake. If you actually enter it right here, and then it just hits your stop loss, although you have a fairly wide stop loss. So let's continue. Okay, another area is here. Price goes up, maximum it did when, okay, at least nice, it was a 1-to-1 right here, at least. So always, I have a question, do you use the automatic trading? Answer live. Okay, you were asking you want to do this automatic trading. You want to use this automatic trading? No, I actually don't use automatic trading. I use something called, this is my personal trading method, Smart Money Concepts. Just send it out into chat. So I usually use that, Hanin. I use Smart Money Concepts as a confirmation together with market imbalance. I stress that a lot, especially the amount of risk that I'm using. I only risk 1% per trade. So I don't go for those 5% trades where after, so let's say you risk 5% per trade. It takes you 20 losing trades to actually blow your entire account. With 1%, it gives me more time to cover back if I'm in a loss. And it actually takes 100 trades before you blow your account. So if you actually blow your account risking 1%, 1%, I think you need to rethink your decision on trading or to just take a step back and start to study more. Okay, I'm not seeing. Okay, nice, nice, nice. Okay, here is another example of how it didn't work out. I'm just showing you guys things that don't work out and how it works out, just in case you guys decide to just do a stop, just follow using the indicator and then it hits your stop loss. So this is another scenario where it didn't work out. Always look to the left of the charts, especially here. Do you have a robot? No, I do not use a robot. I don't trade using a robot. I trade using a naked chart, actually. A naked chart. So what do I mean by a naked chart? I do not use any indicators when I am trading. Later, I will open up my personal chart layout. You can see. So I actually have my personal chart layout right here, where I'll show you later. There's 0 indicators involved. Okay, moving up, moving up. So you can actually see the win rate just following this. Just following this. Camarilla pivot point is not that accurate. People can actually reverse price actually for this scenario, price reverse. This scenario, price reverse. For this, price went kind of right before it reversed. Okay, this is another scenario. It didn't work out. The overall trend is bearish. But then this area broke. You try to short. Yeah, you try to short. Okay, it worked quite well. This is working well. The stop loss there. It's very wide. You get a 1-to-1, but it took quite long. I don't like holding trades for a long period of time. So how long did it take to even hit a 1-to-1? Wow, this is a very, very long trade if you're actually in it. Wow, it took 3 days, 13 hours just by using a sell stop, man. That's very, very long. Same thing with this. Wow. It took very, very long for a 1-to-1 trade. Okay, just in summary, don't just use a sell stop. Use some kind of confirmation before you enter, and also to minimize your risk to reward. Okay, this took 1 day, 2 hours. It's quite long, man. Okay, let's move on to the others. Let's move on to the other. Let's carry on with the presentation. Okay, next we have the Fibonacci. Okay, there's one more person with a question. Do you have a group to do smart money concepts together? Let me answer this live. Okay, do you have a group to do the smart money concepts together? Unfortunately, no. Actually, I don't. I learn it online, and then I have friends in real life who I actually discuss smart money concepts with, and then he's actually better than me at smart money concepts at the time of my learning. So I guess it's working pretty well. The concepts are pretty okay to understand, pretty easy to understand for me compared to other methods. What method do you use, Hanin? What method do you use for trading? Hey guys, just send into the chat what methods do you use for trading. I'm quite interested since we have quite a lot of people. The diversity of trading methods should be a lot. Regardless whether you guys are new to trading or price action. Akuma, you use price action. So do you trade like, do you know who is Raja Banks? You trade like him? Okay, next we have the Fibonacci pivot points. It incorporates the Fibonacci levels into their calculations. Is pretty much accurate, and they find the support and resistance levels. Okay, so the calculation is quite complicated. So I actually wanted to add it into the slide but then it's already in an indicator, it's automated, so you guys do not actually have to know how this entire, all the pivot points that I was covering, how it's calculated. It's fine, it's not needed. Okay, I think somebody is asking another question. Okay, Hanin, you are asking about money management. What do you mean about money management? Do you mean risk management? Do share it into the chat. I can help to answer your question regarding that. Okay, risk management. I'll just do a quick one. So hopefully the others can benefit on that too. So let me clear this out. Let me take an eraser to clear this out. Is it not clearing? Forget it. Okay, so I risk 1% of my accounts. I only risk 1%. So let's put it into very, very simple terms. Extremely, extremely simple. So I have $100 in my account. Okay, maybe 1,000. So per trade, I only risk 1% of 1,000 times 1%. So every time I lose, let's say I lose the trade, hit my stop loss, I only lose $10. But if I have a risk to reward of 2 to 1, I'll get 2%, which is equals to $20 profits. So how do you calculate your lot size? How do I calculate the lot size for the 1%? So let's say I'll just draw it out. This is how a trading view looks like. So we have the stop loss level, the SL, the take profit area. So the SL, let's say we have a stop loss of 9 pips. 9 pips. But then including commission plus commission is equals to 10 pips. So we just take our $10 divided by 10 is equals to 1. And then you take your 1 and divide by 10. So you get your lot size. So your risk amount divided by the pips you are risking, and then divide by 10 one more time. This is just a manual calculation. Okay, let's move on to the Fibonacci one, the Fibonacci thing that we are talking about. So have I answered your question, Hanin? Okay, the pivot points levels are determined by calculating the pivot in the standard method. We have the calculation method is pretty complicated. I'll not get right into it. Okay, and why people like to use Fibonacci is because many traders use the Fibonacci ratios. They use it for retracements and as a place of where they would like to close their trade or take profit at Fibonacci levels. So I also like to use Fibonacci to determine to add confluence. Confluence, let me write it out in case my pronunciation is not that good. So to add confluence to my trade, I like to use Fibonacci. So I also look to the left of the chart. Left to the chart as in, there must always be a reason on why there is a take profit area. Okay, okay, I'm not sure how to pronounce your name. I do apologize for that. Okay, you say you are a beginner. So I don't understand anything in day trading. Is this course okay for me or should I skip this course? Do stay around to listen. I can actually show you some methods where you can increase your chance of to have a better chance of a winning trade. I'll just simplify it down. Later I'll show maybe some form of smart money concepts, a very, very simple one later on. How I take it and I only take that kind of trade. Okay, next we have the Woody's pivot points. So it has a greater weighting on recent price data, very similar to the EMA, and it's used for intraday trading. So for Woody's pivot points, they are made up of multiple key levels calculated from past points. The key levels include the pivot point itself and multiple supports and resistance levels. So traders actually use these levels as a guide for future price movements when setting up trades. The calculation for the Woody pivot points differs from other pivots because it places a greater weighting on recent price data than the other variations. Okay, it's also widely believed that the high and low prices are a result of emotions in the heat of the battle, while the opening and closing prices are a more accurate representation of the mood of the markets. Okay, let's move on. I can open the chart again to present the Woody's pivot points. Okay, I think it might be this. Okay, we have the, okay, my screen has all these lines. How do I remove it? Can you guys actually see the blue lines on the screen? Can you guys see it, or is it only me? Do let me know all these blue lines that I'm actually looking at. There are some lines on the screen. You guys see all these lines right here? Oh, damn. Okay. I think it might be something to do with the drawings. Oh, wow. I got to... Okay, I found it. Oh, yes. Nice, nice. Okay. Found a way to clear it. Hey, thank you for confirming that. Okay, for Woody's pivot lines, just like the PowerPoints, okay, they like to sell. Where are they selling? They're selling at the first resistance, downwards, or they long it from the second support or the first support. My personal thoughts about all this, about entering like that, just by entering, oh, I have a buy limit set here, buy limit set here, stop loss below, buy limit. The thing is, I take it as it's some kind of gambling. I'll take it as this gambling, because if you just set your buy stop or your sell limit just at this level, along this level, waiting for price to go down, you are not adding confluence. What you want is multiple confluences to the left side of the charts, or multiple like confirmations that this trade might go in your direction, instead of just setting a buy limit, sell limit. I wouldn't do that. Okay, Woody's pivot points. Get to the chart. Okay, let's take a look. Since Woody's pivot points are for the intraday traders. Okay, no issue, continue class. Okay, sure. Okay, you can take a look right here. So, you have a short position, stop loss at the second resistance. This is using the Woody's. I'll just write out Woody's points. Make it larger a bit. Okay, maybe 20. It's too small. 40. Okay, Woody pivot points as usual. 1-to-1 risk to reward. So you're just trading zone to zone, just like a Fibonacci. Zone to zone. The first support and the first resistance. Also, later I'll show you guys how I enter using smart money concepts, a possible way that we can implement it together. Or if you guys have any methods that you guys are currently using and that I might know, do send it over in chats. I might try to implement it in. So same thing here. People try to long. Let's say you long it here. Your stop loss must be a considerable area. It's up to you where you want to set. So if you set it right here, your stop loss hits. But let's say in a scenario where you set your stop loss lower, can you show how to calculate the pivot points? We are actually using an indicator. I'm not calculating the pivot points, so you can actually search it up. The indicator that I currently use is by Chris Waters. And it's under indicators. We do not calculate the pivot points ourselves. If you like to know the calculation, I actually want to add it to chart, added it to the PowerPoints, but I thought about it. I think it's too technical and it's something that majority of people won't be using. They won't be calculating. They'll just see it and they will forget about it. Since it's already in an indicator, so I guess the calculation is not needed. Okay, but thank you for asking, Ronel Ramos. Okay, so the indicator that I currently am using is pivot points by Chris Waters. So this indicator is actually quite good because in the settings, we can show the floor pivots. This pivot I'm not presenting. So we are showing the Woody pivots, the Fibonacci pivots, and the Camarilla pivots. So it's like an all-in-one indicator. So same thing with let's say in a situation where our stop loss wasn't hit. Let's say we set it right here, stop loss right here. In such a situation, we still want a one-to-one risk to reward. Okay, this was pretty good to the next resistance, 1.16. But something I would not like to do. I don't like, as usual, I like to say I don't like to hold my trades for. This took 6 hours. I normally like to hold my trade for maybe around 2 hours, 2 to 3 hours, and I'm out. If not within the hour would be best. Okay. Let me show you guys. Do you guys want to know there are formulas for all styles online? Yes, there are many. It's all online, but I'm sure nobody is calculating this by hand, right? Like you wake up in the morning, you decide to calculate the pivot points, start to use all the calculations. So you can actually search online, Camarilla pivot point calculation. So you can see the calculation is so complex. There's so many calculations to do just on that. I don't think anybody will be just calculating, will wake up in the morning, open their chart and calculate, right? You'll be looking at multiple currencies. That's why the indicators are there to automate it. So by the time you calculate all this finish, maybe it takes you 15 minutes to half an hour. By then, you would have wasted your time because I'm sure a few people are looking at maybe 4-6 currencies. So to calculate all this out manually by hand, it will take 2-3 hours. Please don't do that. Just use the indicator. It will save so much of your time. Just open, close, open, close. It's very fast. So do you guys want to see how I enter a trade? So yesterday, I actually took a shot right here. Okay, it's not showing cannot show an example. Maybe I can show a reversal. Okay, let's say I actually took a reversal trade that hit my break even. So let us zoom in on the 5 minutes. What actually happened? So if you guys are actually using smart money concepts, it's actually very, very similar to how a pivot is used, how a pivot is presented. Okay, now we are already in the final parts of adding the pivots into the strategy. So for my personal one, I like to use smart money concepts. So I like to add it in. I like to add this into my trading style. So just now I was saying the high and the lows. So the low and the high, you can see this area, hit, tapped, reverse. This area, tapped and reversed. So yesterday, I actually entered a long. I wouldn't lie to you guys. I entered a long. I entered a long right here. I was hoping for price to continue going up to clear this high. Why did I enter that? What was my confirmation? So I took this area, which is the low of the pivot. So I'll set it as the sell side liquidity. So I saw that area got cleared and price went up even higher. I expected. This is the buy side liquidity, the high side. I'll turn off this first for now. Okay. So when price on the M15 charts, it cleared this high, this small little high right here, using smart money concepts. So I like to call this break of market structure. BMS is called break of market structure. Okay, so moving into the 5 minutes. So I actually use 15 minutes to get the overall grabs, the overall picture of the market, what is going on in the market. So moving on to the 5 minutes, chart. So this was the 15-minute high that was broken. Price went up even higher. I tried to implement my personal trading methods. And then what did I spot? I spotted on the 15-minute charts, market imbalance. So you can see this area right here, this area. Price previously did not come into that area. So I was looking for price to come down, tap that area before price continue going upwards to clear this high right here. But I did enter. I entered right here. I entered there. So let me draw out this area. I entered there. Where's my long? With my stop loss at the bottom. And I was looking to the top. So actually to the left, there was something. I already cleared the chart. So all the way to the left side of the chart, there was a point of interest that I was aiming even higher than this specific area. So even for me, I do have my wrongs when I'm trading. It's okay to have wrong as long as you guys have a trading journal, you record it down. So the moment price came down, wow, I was looking at it yesterday. Price continue coming down. I know most of you guys, a lot of beginner traders, not you guys, a lot of beginner traders, when price start to go this low, or you start to close out your trade, then only for price to go back up, and then you will be thinking, damn, I could have held on to my trade and I wouldn't have lost money. So the moment price broke this area, broke that area, that low right there, cannot get the thing out. So the moment price broke that area, I set that area as the ideal invalidation level. What do I mean by ideal invalidation? To me, this area is no longer valid. The trade is no longer valid already. So I believe that if price broke this area, I was expecting price to possibly, I was just hoping possibly come back up before it continue going downwards to hit my full stop loss. So this is how I manage my trade. Not only do I have a stop loss right here, a take profits, an entry, I also have ideal invalidation. So you must know when your trade is not going right. You don't just hold your trade and you tell yourself, yes, price is continue going up. You see, it continue going up. And then in the end, it still went down and hit my stop loss. So I have an ideal invalidation level. So once I had two accounts. So one of my accounts, I set it to break even. My live trading account, price went up. I set to break even the moment price hit this ideal invalidation level. And thankfully, since we cannot control the markets, price could have just continued going downwards, hit my full stop loss. I set my trade to break even. What do I mean by break even? So I was just hoping possibly for price to come back up, and price did, came back up to my entry and closed at break even. For the other accounts, I have 2 accounts. For my other accounts, so I'm actually doing a challenge, a trading challenge. So on the other accounts, I actually cut off half of my risk. I closed off half of my trade right here and I let it run. So in the morning when I came to office, I took a look. Wow, price actually almost hit my stop loss, but it continued going up. So somewhere around here, I closed somewhere around here. So my take profit isn't that much. In the end, it was like something like this. It was pretty bad. It was only up around 9 pips and I just closed it out. I was busy with work, so I couldn't manage it. So I closed it. And thankfully, thank God I closed it. Price continued going downwards. And then it also cleared my stop loss. So this is just an example of how I manage my trade using smart money concepts and idea invalidation level. It's very important to have that. A lot of people actually don't, when they teach online, they don't tell you anything about idea invalidation. They just tell you to let the stop loss do its thing. But obviously, you still got to manage your trade when it isn't in your favor. Price is not going in your favor, especially in my favor last night. So can move on to another trade, a possible trade. Smart money concept. So we have this level. Let me take a look back. Just want to share with you guys one trade that I took. Okay, this is the one I remember. Last week I took this trade. So I took this trade right here, but I actually closed here. I did not close it at here. If I say I close it here, I'm lying right to the chat. So why did I close it here? Why did I close the trade there? So if you guys look to the left, there is what do I see? I always like to talk about the market imbalance level. And same thing, I will be implementing what we are teaching today, the pivot points. So we have the high, the low, the high, the low, pivot points. So I set this as, that day I was looking at this area. So this area right here, it's the 15 minutes market imbalance area. So I mark it out. What do I mean by market imbalance area? See, if you zoom closer, this area, price previously has not come into. So I'll set it as the red area for a possible reversal. So when I was looking, what I also like to do is, there's something that's why I don't use indicators. I'm just showing you guys plain how I look at a naked chart. You can see all my indicators right here are closed. How did I answer? I like to mark out the Asian range. So the Asian range goes from, let me check the timing. Okay, I'm using the New York UTC -4 timing. So I'd like to do is the New York time, the Asian timing, it's from 1900 hours, 19 o'clock. So I like to mark it out until 12 midnight New York time. You can see at the bottom, it's 000 hours. So I like to mark it out very clean. My chart is just like that every single day. So I mark it out black, mark it out as the Asian range. Top, center. So how did I know that price was going to go up? How did I know that? So we go on to the daily before that, to the daily chart. Let me get this out. What day was this? 13 October. So I actually took the previous day high. It was here. And the previous day low. Let me get back into the 15-minute charts. To apologize for that. Okay. So we got it right here. The trade happened on a Thursday. So this was the previous day, Wednesday, high and low on the daily chart. So just put that into perspective. Previous daily high. See, I like to mark it out. It's just like that. I don't use any indicators. Previous daily low. So PDH, previous daily high. PDL, previous daily low. So I just do it like that. And then I wait for the London session to start. So between the timing of over here, from this area to 2 o'clock, I do not touch until London session starts at 2 a.m. New York time. So I do not touch until it's 2 a.m. 2 a.m. onwards. So what do we have here? Price, what did price clear? Price cleared the Asian low. Asian low. So I like to wait for the Asian session to be cleared, either the high side or the low side. So marking this out, we can say the Asian low got cleared, Asian low plus sell side liquidity. So this area got cleared. What do I mean by sell side liquidity? So in smart money concepts, we have this area. Look at this, multiple wicks. So many wicks to be cleared. So price cleared all of those together with the Asian low. And I was waiting for price to reverse. So price continue going up and it cleared this high. Take a look, it cleared this high right here. So I already marked it out. Break of market structure. Let's move on. So I waited for the 15 minutes to close before I start to look for an entry. So on the 5 minutes charts, since price already broke here, same thing, I like to enter by the market's imbalance. So on the M5, look at this very minute area. Very minute area. Let me make it straight. So you look at this minute area right here. Very tiny. Let me zoom in all the way. You can see previously price has not tapped into this area. So I set a buy stop here. You can see price actually tapped into it. Very tiny. Price tapped into that area. And then I set my stop loss at the very bottom. Why do I set my stop loss at the very bottom? Because there is another market imbalance right here where price could potentially come down to before it goes up. So I set it as that with my take profits up to the M15 market imbalance, and I just close it right there. This is the M15 market imbalance. You can actually see this, the high is the previous day high and the previous day lows. It's also a pivot point, a pivot high and the pivots low. So in a way, I'm actually also implementing pivots into my trading, just that I draw it out manually. Okay, and then it became a 1 to 2.42 risk to reward trade. Okay, do you guys have any further questions regarding this trade? Do let me know in chat. Do let me know whether you guys are interested to learn more about these smart money concepts. Maybe I can ask IronFX. Maybe we can have a session about it in the future. I can share more about it. Any questions, do let me know. This is how I actually refine my trade without using any indicators. Okay, yes, it would be great. Very nice. Any validity in the marks pivot? Oh, I'm not presenting that today, unfortunately. I do apologize for that. We are interested in SMC. Yes, SMC is very nice because there are no indicators involved. It's just a plain chart. I'm just using a plain chart without any indicators. Explain more about SMC. Yes, I like the attitude, that learning attitude. That's how I felt when I first saw about smart money and Wyckoff. Let me open this up. So for smart money concepts, it's actually quite so you can actually have a better understanding. I would say a better understanding in smart money concepts if you read up on Wyckoff. Read up on Wyckoff. Let me type it out in chat. Read up on Wyckoff 2. Yes, the value gaps. The value gaps are taught by Inner Circle Trader. I think I mentioned it in the past webinars that I hosted. So Inner Circle Trader, I'll just credit him. Inner Circle Trader, ICT. He also taught about the fair value gaps, or also known as the market imbalance. So you can already see that I'm implementing. So this area, I took it as accumulation. So what is this? Wyckoff accumulation. That's why I asked you guys to read up on Wyckoff, where there's an accumulation area. So it better explains why on smart money concepts after it clears some liquidity and it continues going up. So for this entry, as what Stephen has mentioned, value gaps, the fair value gaps, I took it from Inner Circle Trader. And same goes to the market imbalance right here, Inner Circle Trader. And this high and low thing is also the pivot points. So you guys notice I actually developed my own, I wouldn't say developed my own. I combined multiple trading strategies before and backtested it first before I implemented it on the live account. Okay, explain more about SMC. You can actually learn more about SMC on YouTube. I'm sure quite a few YouTubers are actually teaching it for free. They don't charge anything. You can learn it for free online. Okay, moving on. You guys can actually screenshot this. So what happened here was there was actually a news. Last week there was a news, so let's not get into that. You guys want to screenshot this trade down? Do screenshot this down. So when you're learning smart money concepts, you can maybe look back on this and kind of understand more in depth on why I actually entered the trade the way that I did. Any more questions, do let me know in chats before we end this session. I'll check with IronFX whether it's possible to hold a smart money concepts session into the future. Read up on Wyckoff. So if you want to know more about Wyckoff, a very, very simple one, you guys can actually check out. Let me show you guys. People, okay, Doge. So you can see this is my personal trading account. I'll send it to chat. That is my personal trading view account. I actually did a short series where I did it on my own at home on the educational series on the Wyckoff accumulation. So it actually kind of explain why. What does it explain? Why price after it clears the sell side liquidity, why price continue heading upwards. So you guys can read this, a short little education thing, Wyckoff accumulation part 1 and Wyckoff accumulation part 2. You guys can follow me if you want. Follow me on TradingView if you want. I've sent it over into chat. Okay. Any more questions? Do let me know. So let me send the link of this also, just in case you guys want. Yeah, I'll probably be writing more. So probably on the pivot points and maybe smart money concepts. So if you guys want to have a short like a quick summary on what is smart money concepts or pivots, I'll be writing it down on my TradingView accounts very, very soon. So stay tuned. If you want, just follow me. So I got only 11 followers. Oh, someone followed me. Thank you very much. So we increased to 12. Just follow me. I'll be posting more educational series for free. You guys can learn. Hey, thanks. No worries, man. Okay. Any further questions before I end this session? We have a minute left. Any more questions before I end? Okay, thanks. There are no further questions. Hey, thank you very much for following me also and for the support through this. Okay, now we got 13 followers. Very nice. Hey, bye. Hey, thank you very much for joining me today, as usual. My name is Chen Yongjing, and I hope you guys have a good day and take